Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. The markets are off the day's high. The Nifty slips below the 10,200 mark. Media and metal stocks slip into the red. Bharti Airtel is the top gainer in the Nifty after Goldman Sachs expects a 35% upside for the stock. Alken Labs is gaining in trade despite the US FTA planning a surprise visit to its Daman unit, and that's a Bloomberg Quint exclusive. Primary bond market dealers asked the government to issue more short-term tenure bonds as they help cut mark-to-market losses. And the US Fed is expected to hike interest rates today, and while it is also expected to stick to its original guidance of 3 hikes this year, it could hint at a 4th, according to Bloomberg.
Well, that hasn't deterred the market too much. Yes, we're off the highs of the day, but we're steady over this. Actually, no, now we are at the lowest point of the day, I must admit. So in the last few minutes, there's a bit of a pullback that we've seen. So about 1/3% higher for the Nifty. Mind you, this was unexpected. It was highly unlikely that we would have stayed so high, about 1%. I was pretty surprised in the morning when I saw that brisk start as well. Ahead of the Fed decision, with the global markets doing what they're doing, difficult to foresee this. Actually bring up the European markets, bring up the Dow futures. You'll see what I'm talking about. Very, very flat for the rest of the world as well. Hardly any move there for the European markets. Dow futures the last time I saw, but hardly moving around. So ahead of the Fed decision, an event that is, Jerome Powell's first policy, you wouldn't expect too much of fireworks in the global markets. And therefore the Indian markets, naturally they're coming off. Nothing too surprising out here. Pull up the heat map. In the morning, there were only 5 stocks in the red when the first tick of trade started. Now you will see that there has been a sea change. About even Stevens. Again, the stocks which have come off probably included Tata Steel, included Tata Motors, Tech Mahindra, and a couple of IT names have come off as well during the course of the trading day. So those have come down. What's actually gained in strength and gains quite strongly today is Bharti Airtel. That's one up about 4% in trade. Bajaj Finance has been seen as sporadic moves. Actually today NBFCs by and large have not had a bad day. Bajaj Finance is up, and you'll see the broader end of the spectrum too. A clutch of NBFC names are doing okay. Indiabulls Housing Finance should be somewhere here. Yeah, about 1% and 1.25%. HDFC is about 1% higher. So NBFCs as a basket seems to be doing rather well for itself in the session today. Net, aside of that, no clear winners or losers. Today will be a bit of a tug and war. Some individual names. I doubt really that there will be too many large positions that will be taken. Volumes too would be slightly muted today. Navneet, what are you spotting in the liquid universe though?
While the markets are off the day's high, I just want to check the Nifty premium first on the futures. Remember, a majority of the day today, the premium was on the higher side. Yesterday, premium was about 18 points, which surged to about 28 or 30 points in today's session. So as we speak now, that premium, which surged to levels of 30, has come down to the same level which was seen yesterday of 16 to 17 points. That's telling you at higher levels, there were some short positions being taken. Remember, the high level of the Nifty March futures was somewhere about 10,100 or 40 or 50 thereabouts. Let's just pull up the Bank Nifty futures as well as we speak. Yesterday, there was some unwinding seen for the Bank Nifty futures after fresh shorts which were built up in the last few sessions. As we speak, the open interest on the Bank Nifty March futures has gone up by nearly 5 to 6%. But in terms of option strike, one good part was that for a change, instead of call writing, today there was more of unwinding seen for majority of the call strike. So you had the 10,000, 10,100 as well as the 10,200 call strike, which saw unwinding in trade, but some bit of addition seen for the 10,300 call, which has seen addition of nearly 6 lakh shares. But on the put side, aggressive riding for the 10,200 strike, that's added nearly 12 to 13 lakh shares as we speak. And the 10,000 mark, remember, that remains pretty crucial. So far, the bulls have been able to defend. That's the strike which is sitting with majority of the open interest, whether you compare it on the call side or on the put side. So right now, the total open interest on the 10,000 put strike is nearly 67.5 lakh shares. Just few stocks I want to highlight. BEML, the counter is out of the F&O ban for today's trade, and yesterday in the last 5 to 10 minutes of trade, there was a sharp surge seen, and today it's the top F&O gainer as well. The stock's up nearly 4 to 5%. There are some long positions which have been seen for BEML futures. It's also bounced back from its 52-week low levels, which was seen this week. The other one is NIT Tech. We've been invariably mentioning this counter every second day. And after touching those levels of 923 this week, there's been a bounce back for NIT Tech. So second straight day of aggressive long build-up. If you could just pull up the futures plate, you'll see 22% higher when it comes to the NIT Tech futures. I also want to highlight in the morning, actually, the futures were trading at a discount, which is now turned into a premium, but just a mild bit of discount. The other one is PVR. That's been quite weak in today's session. If the actually, the stock's also fallen on high volumes if you look at the cash side. The futures of PVR today have seen some bit of build-up, 15% higher, which is indicating that there are some fresh shorts being built up for PVR as well.
Well, so that's the sense on the markets and the liquid universe as well. Let's get in a voice. Mr. PVK Mohan, he's head of equity at Principal PNB Asset Management, joins us right now on the show with his thoughts. Mr. Mohan, thanks so much for joining in. Appreciate your time. The market's expected to be on tenterhooks ahead of the Fed, but post this Fed event out of the way, what do you think the near term holds in store? Until the earnings come by, do you believe there is a higher probability of we having downside in the Indian markets as opposed to some bit of recouping of losses?
So I think, I mean, fundamentally the earnings trajectory has been definitely better. There has been better momentum in the earnings growth, but in some sense that's kind of priced in, right? The rally in the last 3 years, despite no earnings growth, in some sense was, ahead of the market moved ahead of the actual earnings flow through. So I think by itself these earnings are encouraging. They set the tone for a robust growth for FY19, but probably not good enough to drive the markets up because we haven't seen that many upgrades still. And I think second issue, I think the markets bothering about is obviously the global events, now the Fed hike and this so-called trade wars and some local issues in terms of one important state election, some more down towards the end of the year and the general election. So it's very event heavy, so I think that's going to dominate things a bit more, be the dominant factors going ahead actually.
Mr. Mohan, good afternoon to you and thanks a lot for joining us. But overall, what's the view in the Indian markets? There was that concern because of stratospheric valuations that the Indian markets were quoting. But considering we've corrected now 10% from the highs that were witnessed this year, do you think the current valuations now look attractive or there could be more correction which will be in place?
So from a fundamental perspective, I think if you compare it to historical long-term valuations, we are still trading slightly above that levels. So I think fundamentally India always enjoyed a premium over other emerging markets and a growth premium. So that while that has shrunk, you could say by historical standards we are still slightly, the markets in that sense could still correct slightly from current levels. And I think, as I said earlier, second thing is, one is the fundamental, second is the flow of news. And I think that's been a bit cautious at this point of time. So our belief is near term, a little bit of, event risk around this state elections and all that coming up, the tax collection ramp up of GST, how the monsoon is, that will keep the markets under check. So our belief is probably maybe a little more tactical pullback on the upside, but still maybe I don't think we could still say that we've seen the low for the year.
Mr. Mohan, have you been, I'm just wondering, a lot of fund managers and mutual fund houses and AMC houses have given us different views about the quantum of selling that they have done within the various dividend schemes in the month of March. What's been the PNB Asset Management team doing? I mean, what have you done? Have you booked profits in your dividend schemes in order to pay off the dividend before the 31st March to your investors?
Not really. I don't think we've seen much of activity on that side, really. So nothing significant that I could worth highlighting, actually, on that.
Okay, that's interesting. So it's interesting simply because the opinion of the street is divided out there. A lot of people, including you, are saying that what's happened is normal par for the course and nothing too dramatic. There are an equal number of people on the other side who said that they've seen within their schemes and otherwise also some bit of profit booking in order to award their investors. Nevertheless, that's one. Two, what about, what's your view here on what the next 12 to 18 odd months could throw up? Would it be the return of some of the beaten down themes which haven't created quite money and are at a good levels when it comes to valuations, but not immediate valuations, because currently even the beaten down names or stocks trading at those lows, pharma for example, don't have too much of earnings visibility. Maybe 3 years out there is some earnings visibility, and which is why my question is more about an 18-month to a 24-month perspective. What do you think will be the winners? Would it be some of the beaten down names trying to make a bit of a comeback, or do you think the expensive names which have shown earnings growth till now will continue to find favor amongst institutional investors such as yours?
So I think more than themes, right now it's the market is probably going to be much more bottom up. But broadly, our belief is that companies which have a good growth trajectory would continue to outperform. So I think it is going to get driven by the fact that companies which can sustain a reasonable level of growth, maybe valuations, people may wait for better entry points, but broadly companies with better growth visibility would continue to perform well. So I think just because of something being beaten down may not be a good enough reason. Unless the earnings growth trajectory revives, I think we don't believe that just because of underperformance it's a good reason to own a stock. I think the bias would still continue clearly to be favoring companies which have a good growth visibility and which are, from a valuations perspective, give comfort to investors. So that would still continue to be the bias of the market.
And Mr. Mohan, in fact, that's been a consensus call from the majority of the market participants we interact with, that after 4 years of stagnated earnings that we've seen, FY19, the earnings growth can be somewhere, the top end figure is somewhere between 23 or 24% as per Bloomberg as well. But if you do expect earnings growth to recover in FY19, according to you, which are the sectors which will contribute the most to that?
So I think clearly coming off a low base in March 19 because of this latest RBI circular. So on the relatively low base, I think banks and all financials could see reasonably good growth. But that's really assuming that they take bulk of the pain in the current quarter, and from there on things could get better. I think all the consumption related sectors would continue to grow reasonably well. The urban oriented consumption themes have continued to grow. That would continue to grow. I think even the bit more rural oriented consumption themes would start seeing better growth. So consumption as a theme, I think would, our belief is that that would continue to grow reasonably well. So I think essentially will be led by consumption oriented themes largely. I think that's still going to be the key driver at this point of time. I think investment related, our belief is still that while there are some green shoots, they're just way too early at this point of time.
That's a wide bucket though, consumption. Are you picking and choosing there? Is it FMCG? Is it consumer durables? Is it autos? What do you think gives the biggest bang for the buck?
Yeah, I think all of them actually, yes. It would be a combination of autos, I think some consumer durables, even the FMCG pack. It could be even, let's say some of this financials who are driven by this, financing this consumption boom. So it's going to be that. I think even cement demand, for example, cement as a sector, we like, though prices have been a bit subdued, the volume offtake clearly is showing an uptick. So that's again a sector to watch out for. So I think it covers the entire gamut of consumption. I think durables, FMCG, autos, and therefore the related ancillary sectors, cement, construction. I think those would be the sectors. And I think second thing is clearly metals has seen a fairly good year. For the near term, I think that earnings momentum there also probably remains intact. I think much would depend upon after this import duty being put in, things may change a little bit. But in the near term, earnings momentum in metals again remains strong. So that again would continue to grow reasonably well.
Okay, we'll leave you at that, Mr. Mohan. Thank you so much for taking the time out and joining us and giving us your thoughts.
Thanks a lot. A pleasure for being on. Thank you.
Pleasure having you. Thank you. That's the view from Principal PNB. Let's dwell on a company. Now, this week we are trying on Countdown at this time around to get in companies which have either a large global exposure or have premium global products which they sell or distribute in India. Redington, the name needs no introduction, so you all know the reason why Redington is here. They had a fairly mixed bag of a quarter, but the outlook for most people for Redington India for FY19, possibly even Q4 FY18, is fairly strong. So let's get in Mr. S.V. Krishnan. He's the CFO of Redington India. He joins us right now on the show to talk about all that and more. Mr. Krishnan, thanks so much for joining in. Just trying to get a sense from you as to how is broad business looking before we come to specifics. Q3 slightly soft. How has Q4 been, and what's the broad thesis for the next 2 or 3 odd years?
Good afternoon.
Good afternoon.
Yes, this year overall, if you see for the 9 months, we have had a growth rate of about 6% in terms of revenue and about 8.6% in terms of profits. And this year, more specifically, because of the GST, which got implemented on 1st July, there was I should say a structural change in the marketplace, because we sell to about 30,000 plus channel partners across the country. And as you know, GST disturbs the complete ecosystem, and more so at the small and the medium businesses space. And because of which the growth rate for the current year has been lower as far as India is concerned. In terms of future outlook, we feel very confident overall, and more specifically about India, because we have a very strong enterprise profile, and enterprise segment, we expect that to grow at a much faster rate because of various projects like Smart Cities, Digital India, Make in India, etc. So we feel very confident in terms of the medium to long-term growth.
Mr. Krishnan, there was a hiccup which was seen in the third quarter in the form of margins. I guess the revenue growth was still there, but your EBITDA and the EBITDA margin saw some bit of degrowth. Has that stabilized in quarter 4?
It will stabilize. See, what's happening is among the mix of the products, the margins differ. And mobility is a segment where the margins are lower. That's a segment that had grown faster in the last couple of quarters, that had impacted the overall margins. As we move forward, as I mentioned in the beginning, once if the enterprise segment starts doing better, we should see the margins becoming much better than what it is today.
You would probably have the benefits of lower warehousing costs as well, Mr. Krishnan?
Going forward, yes, that again, that would happen because of GST. As you know, GST is not yet settled in India. We have just started the process, but still there are a lot of things that are yet to be in place. The GST network is not fully up and running. The seamless automatic credit mechanism, input credit mechanism is not in place. And also there had been few changes in terms of rates that had happened, and the last one happened in the month of November. And the market is expecting further more changes in the rates going forward. And the e-way bill that is not yet been in the system. So I'm just listing down various factors that are still work in progress. So it will take a few quarters before GST as a regulatory change settles down across all the business establishments. Once if that is in place, that's the stage where all the industries will start planning in terms of reducing the warehouses, realignment of warehouse space, realignment of transportation network, etc. So that's where I think there will be some saving in the logistics cost and more particularly the warehousing costs.
And do you see any impact of custom duty which has been announced on mobile and smartphones?
Okay. See, we being a distributor, we are not highly impacted by the change in the duty rates, because to the extent we carry the inventory is where we should be worried about. And that again, generally, these are supported by vendors. But whenever there is an increase in the duties, to an extent that did create some dampeners in terms of demand in the marketplace. But just wanted to tell you, we carry the premium global brands. In the premium global brand, some couple of thousand price increases doesn't change the demand picture in any significant fashion. So just thought I should tell you this. But having said that, simply any duty increase do have some negative impact, at least on a short-term basis in terms of demand.
As you mentioned, this year has been all about disruption in the form of GST, and now we'll have the e-way bill getting implemented from the new financial year. And I presume your bottom line growth for the year will be somewhere flattish. Could you just quantify for us going ahead, since you've also highlighted it will take 3 to 4 more quarters for GST to stabilize, but what sort of earnings growth can an investor of Redington expect in FY19 on the top line and bottom line?
See, just wanted to give you a comfort. Redington has been a growth story for years. If you just take the last 10 years from the time the company has got listed, we have had a revenue CAGR of 17% and EBITDA CAGR of 16% and PAT CAGR of 16%. And you can very clearly see the strong growth, and this has come with a free cash flow on an overall basis, and also return ratios being quite stronger. So this is a company which has been in growth on a consistent basis, irrespective of which brand does better, which vertical does better, which geography is doing better. We have various verticals and various geographies to, in a way of speaking, to play a complementary role. So I think repeating a growth rate of that nature in future should not be a great challenge for us.
I think most brokerages believe that the quantum of growth rate could improve FY19, FY20. One, a comment there. Two, you anyways expect, due to a lot of factors, margins to move up. With business moving up, the natural tailwinds would probably aid as an improvement in margin as well. How do you think the operational picture will look like if FY19 and FY20 turn out to be good consumer years, and thereby does the pace of growth in the bottom line look much better than what the pace of growth at the top line would look like?
We think so. We have always strived to achieve an earnings growth faster than the revenue growth. So that would show the operational leverage, and that's something that we always keep trying for. So I think that should happen. And even in terms of operational efficiency, with the GST coming in, and also some of the other processes and systems that we are bringing, we think we'll be able to bring in using operational leverage, and hence the margins can be better than the revenue growth.
All right, Mr. Krishnan, I appreciate you joining us today and taking us through the highlights of what's happening with the business right now. And all the best to you for the upcoming quarters.
Thank you. Thank you.
Okay, that was the management of Redington, sounding pretty positive on maintaining their growth rates in FY19 and going ahead. As they highlighted, they've maintained 17% on revenue and 16% on both EBITDA as well as PAT, and that's the CAGR growth he highlighted. But just want to highlight a few stocks before we go across to our next guest. Reliance Communication, pull up the intraday chart. I think that surged nearly 12 to 13% in trade in just last few minutes. Okay, it's almost at day's high now, 25.26 is the price. Balrampur Chini, which had corrected one of the beaten down counters, is seeing some bit of bounce back since yesterday. So that's also trading with gains of almost 9% as we speak. But index 10,167 for Nifty, up 42 points. It's definitely come off 40 to 50 points from the day's high that one had seen. And Bank Nifty 24,290. Remember when we opened, the Nifty PSU banking index was quoting gains of nearly 2%, but there has been some sell-off from the highs, and currently the Nifty PSU banking index has almost given up all the gains that were seen in the opening trade. But let's move on. Jonathan Garner of Morgan Stanley believes that the real story lies in the hardening of the dollar LIBOR market and not the Fed. In a conversation with Bloomberg Quint earlier today, he said that equity markets will have a rough ride going ahead and may have already peaked for this year. Listen in to a slice of that conversation.
Well, I think what's really interesting is that the private markets, the LIBOR markets, dollar LIBOR, has already moved far more aggressively than Fed funds. So if you look at 6-month dollar LIBOR, it's actually reached 2 3/8, whereas the Fed is likely to raise Fed funds by 1/4 of a point to 175. So we've actually already, for the interest rate that really determines corporate costs, are experiencing a very significant increase in interest rates. So unless the Fed is in some ways sort of super dovish, I think we're already looking at a significant tightening of monetary policy in the US. And in addition, China is tightening monetary policy at the same time. And this joint tightening is a key reason why we're so cautious on markets here.
Jonathan, could there be 3 hikes, or will they give any kind of indications that there could be a 4th one as well? Is it too soon to do that? And are the markets already pricing that in?
It'll be 3 or 4, but as I tried to indicate, that it's not actually really the Fed that's in the driving seat in relation to corporate cost of funding. The dollar LIBOR markets, which is actually where corporates borrow at, have already moved to 2 3/8% for 6-month money. And that's, again, a key reason why I think markets have struggled, because the acceleration in the tightening up of private markets, dollar LIBOR markets, is the story of the year, not the Fed.
If that's the case, Jonathan, what's your forecast for the global equities in that context?
Well, our thesis for the year was a rougher ride, and we had a number of things we're concerned about. The reduction in the Fed's balance sheet and actually the fiscal easing in the US is probably one of the reasons why money markets are getting so tight, private money markets. There's some evidence that the Treasury bill issuance by the US government is actually crowding out private borrowers to some extent. And at the same time, we have exceptionally high valuations for the non-financials part of global equities, and overly optimistic earnings expectations in my coverage, certainly in Japan and in North Asia in particular. So this sets us up for a market which we are pretty sure reached its highs for the year in the euphoria of the 3rd week of January. And the rest of the year is quite simply going to be a tough market. And so we're now 2 months since the market's peaked. And I think that thesis, which was very counter consensus in January, is becoming more well understood in the marketplace now.
Okay. Jonathan, last week, data suggests that global investors put in the highest amount into global equities in a long time, nearly 43 billion, which was pulled out from the money markets. So that seems to suggest that in certain pockets of the market, there is a risk on. And here you're sounding very, very bearish.
Yeah, so global equities are experiencing fund inflows, but they've been somewhat choppy. And in my area of expertise, Asia and EM equities, we actually saw in the 3rd week of January an all-time high dollar inflow week, about $8 billion. You're referring to the total universe of flows, which was skewed towards US markets. When you see euphoric fund inflows, it's typically characteristic of a market top. Retail investors are allocating money to the market, but each institutional investors, our evidence is, are reducing risk in equities and moving particularly into shorter dated bonds. So I think that, again, the flattening of the yield curve, the fact that the dollar LIBOR rates are going up, but 3 to 5 year maturity yields have stopped going up, is really kind of indicative of just how near to the end of the cycle that we're getting. So I would put the retail investor inflows into the bucket of something to be concerned about. If you go back, for example, to early 2016, there were very large retail investor outflows, and that's typically characteristic of a market trough, and was on that occasion.
Jonathan, what about the commodity and the currency story? And will the supposed bottoming out of the dollar prove to be a cap on commodity prices, particularly crude?
Yeah, we don't think the dollar is going to be as weak this year as last year. And against some EM currencies, and that does include the Indian rupee, we would expect their parities actually to weaken up somewhat against the dollar going forward. It comes back again to what I started the interview in talking to you about, the fact that dollar LIBOR markets have moved up a lot. So you're getting a much higher interest rate if you lend into dollar markets than you were this time a year ago, and that interest rate's increasing on a daily basis right now. So, you know, the competition in relation to relative money market rates is certainly picking up, and that should stabilize the dollar.
Okay, what about, okay, fine, so that's the currency bit. What about commodities? Do you think crude has hit areas wherein we could say that it's a near-term top for that? And what about the other commodities as well?
We're more bullish we're bullish on crude than we are on metals and mining. So we think the Brent price averages $75 a barrel this year, and it's a story of relatively tight global supply in our view, and actually continued strength in demand in both China and India. And that, I think, keeps the market relatively tight. Whereas in the case of the slowdown we're seeing in Chinese property, we would expect things like iron ore to soften. Indeed, iron ore has been quite weak over the last few days.
Jonathan, can't not have a conversation about India. What's your view on emerging markets in general, in India in particular? And is the spate of good news which buoyed investor sentiment in India coming to a bit of an end?
So we entitled our mid-November year ahead piece A Rougher Ride, so I think our view was perfectly clear then. What then happened was markets moved beyond our base case targets, overshot them significantly in January. They've now come back in some cases pretty well at our targets. You look at Hang Seng on the MSCI IM index, we're almost at our year-end targets. But I do think near term, particularly with the trade protectionism agenda coming out of the US, there's a possibility that we undershoot to the downside. And obviously these are continually under review. But what I would say is that I don't see any particularly good news on the horizon at the moment for markets. Now for India, we were very overweight India last year, but we've been reducing our overweight. We've done it twice, and we've got a very small overweight left on India right now. And I think what, again, one has to be cognizant of in relation to India is the backup in government bond yields in India, which threatens to withdraw some of the flows we've been seeing from on the domestic mutual fund side. But the good news about India is that its growth trajectory is much less trade dependent than other major EM. Its growth trajectory has actually finally picked up, so that is the good news story about India.
Okay, markets have seen a bit of correction, 10,155 now on Nifty, only 30 points higher. Remember, at one point of time, we were up nearly 100 points on Nifty. Good time to get in our technical experts then and get their view as to what to do right now in the markets. Ruchit Jain of Angel Broking is joining us. Hi, Ruchit. Good afternoon, and thanks a lot for joining us. Well, once again, looks like there has been some selling which has come at higher levels just when you thought there was a bounce back in place. Let's say if somebody had created some long positions in the morning, keeping in mind the bounce back, do you think they should be closed now?
Yes, hi, very good afternoon. Yes, if you ask me about the index, then definitely, long positions should be squared off over here. Now, a couple of observations on both sides of the trade could be seen is that any kind of pullback rallies in the recent past also we have seen a lot of selling pressure over there. So this lower top, low bottom kind of formation on the daily chart, which we have been witnessing since last 1.5 to 2 months now, has been continuing. So 10,225, 10,250 range now is a very strong resistance, and even in today's trading session, markets almost tested this 10,225 and again have seen some sort of selling pressure from there. Now, if I see the lower side, what targets could be seen on the downside, we are not expecting any significant sell-off in short term. The prime reason is that if we observe the put options activity, then 10,000 put option has attracted very huge open interest. Even in yesterday's trading session, we had seen a good build-up in 10,100 put option as well. So we may not see significantly, selling pressure coming in the index in next few trading sessions because of this options activity. But yes, upside would also be very limited, and every rise is going to attract good selling pressure on the index. So we can expect 10,050 to 10,250. This 200 points range bound trading could be seen maybe till expiry also.
And in fact, there has been some intraday unwinding in terms of open interest on the put side for a couple of these strikes. And Ruchit, your trading strategies would be?
I have a couple of recommendations, one on the buy side and one on the sell side. On the buy side, we are recommending to go along in Sun Pharma. Although the pharma space has been one of the underperformer in the recent past, but purely if I go on the terms of chart, in yesterday's trading session, this stock has formed a bullish engulfing pattern near its long-term support. This is a reversal pattern which formed after a good corrective move, indicates a decent pullback should be there in near term. So accordingly, we are recommending to go long in Sun Pharma, keeping stop loss below yesterday's low, which is 493, and expecting this pullback move to extend up to 540. And my second recommendation is to go short in Arvind Limited. A simple reason of low top, low bottom structure on the daily charts. Every pullback move we have seen selling pressure in the recent past in this stock. We are expecting this stock to correct further from current levels. So one can go short in Arvind, keeping stop loss above 403 and for target around 369.
Okay, one buy and one sell coming in from Ruchit. Let's also bring in Hadrien Mendonca, Senior Technical Analyst, who joins us now. Hi, Hadrien. Good afternoon. A call on Nifty and your top trading strategies at this hour?
Yeah, hi, good afternoon. So, you know, the way Nifty is actually behaving is pretty range bound. And in fact, if you see a little bit a holistic view of what has happened in the past 2 to 3 months, we are seeing Nifty is actually trading in a falling wedge kind of a pattern. So today it made an attempt for the second time to break out of this falling wedge. So so resistance is exactly from where the Nifty actually reversed, that is 10,200, 10,250 zone. That is a resistance zone from where it has reversed. So I think the falling wedge breakout will actually mean a lot for the Nifty in terms of how it is going to behave in the future. That the reason it has been reversed from those resistance levels, because things have still not changed. So it is clearly visible even on the intraday charts that sell on rally is much more comfortable rather than trying to buy these dips. So nothing changes. The range bound trading will continue, and I think the lower top lower bottom structure still remains intact. 10,500 is way far off for this whole structure to reverse completely. So I think we should stick to sell on rallies at the current moment. As far as the trading strategies are concerned, we have 2 sell recommendations for today. So first is Torrent Pharma. The stock first of all has broken below its 200-day moving average. Secondly, it is broken up from its bearish flag pattern breakdown. So I think these 2 parameters are clearly indicating that we may see furthermore downside for a Torrent Power. So one can actually sell Torrent Power March futures for a target of 230 in the short term and keep a stop loss at 243 on the upside. Now, second stock that we are bearish on is KSCL March futures. Now, why KSCL? Actually, I am expecting and pre-assuming that we may see a symmetrical triangle breakdown from where we could see a big fall in KSCL. So I think one can consider with keeping strict stop loss of 487 on the upside on a KSCL March futures and go short for a target of 465 in the short term.
Okay, Hadrien, by the way, very impressive call on the index yesterday. People who heard Hadrien Mendonca talk about this in the morning would have benefited a lot. So great call out there. I think people would have made what, about 1.5% or 1% and slightly more than that on the index from those levels where the call was given. So great call there. Thanks. Stay on, gentlemen. Ruchit and Hadrien, so much more to talk about. Let's get in fundamental voice on the show as well. Sharmila Joshi, independent investment advisor, joins us right now on the show. Sharmila, thanks so much for joining in. Well, a bit of a surge today. Telecom stocks are up. Arcom, the last time I saw, was up about 13-14%. Bharti Airtel is up 4%. NBFCs by and large are up, and not just on the index. I mean, Bajaj Finance and Indiabulls Housing Finance may be up, but even in the non-index names, a clutch of these are moving up. What's happening here?
Well, I would think that at least for NBFCs and a large part of the banking names, there was some sense that there was some sort of positive sentiment, and you were seeing a lot of short covering as well. So I would think that some of the banking short covering seems to have given up because you're seeing some sort of correction coming in there, but the buying on the NBFCs continues. And I think that is also logical because very honestly, the NBFCs had also corrected more to do with the fact that they will be affected, because of the being part of a sort of a more macro picture for banking and what happens with interest rates, etc. Going ahead. For telecom, I guess, once again, bit of positive news flow, and which has really helped the sector in the last week or so, and joining the overall market rally. But there, honestly, I think, the Bharti Airtel is probably the only stock that I would consider from that perspective, and Jio, but that is sort of a part of a larger Reliance. So there's not much to choose there. So I would actually prefer to stay with NBFCs, and I think an interesting name to look at there could be Shriram Transport, which benefits not just from the fact that it's an NBFC, like in the lending space, but also because of this whole CV ban. So it's seeing fresh buying, and I think that could continue.
No, it could be interesting, Sharmila. I don't know what your views are out here, but just a thought. If somebody's put it out on Twitter as well, that when some of these large assets, select large assets, are willing to pay back some of the money, striking deals, as we've been saying, a side deal with Ultratech as well, and there is a buyer out there who's willing to pay top dollar for those assets. In the case of Binani, in certain other pockets, it clearly shows that these assets were not completely down the water. I mean, there is significant higher residual value in some of these assets, and therefore the NPAs, as feared earlier, which would be too high, might not be that bad. Maybe just
that's going to be
sense.
a good news for all these banks, all the lenders, in fact.
No, so you would presume that some of the lenders, select lenders, which have got higher exposure to maybe Binani and stuff like that, could actually see some buying, because until now the sentiment was just so bad that all of them will have problems, that these news and some return of money could actually help these banks as well. Sorry, you want to make a point? Sure.
So, I mean, the flip side of it could be also that NCLT, etc., could get concerned over the way this whole process is taking place, and if you see it slowing down a little bit because of such counter offers and the general
certainly slow down.
The idea that perhaps these are, as you said, to use your word, side deals happening. I don't know whether it puts that whole process in a very good light, and one would expect that a speedy resolution of NPAs would benefit the system more than such things coming up. And why were these assets undervalued to start with? Is it that the promoters have the money but they are not willing to sort of get their assets clean, or I mean whatever, I mean get their assets off the NPA list? So I mean, I'm not so sure.
No, this one will take long, because
so sure.
Irrespective of what the decision is, either in the Bhushan Power case or the Binani Cement case, the other party will go to the Supreme Court. So there is going to be time consuming process that we are facing. But just the fact that there is a bit of a return of confidence amongst some of these asset owners is fairly interesting. By the way, heard anything on TV today? I mean, that stock has just gone berserk the last few days.
Wasn't there some news of them selling some radio?
Is that as big a positive for TV Today to do what it is doing?
Well, I would think that there has been interest in media stocks as a whole. So if you pick up any stock, I think, you've seen some or the other run. So I think the last bit of buying has come because of this news. But overall, I think people are quite positively placed on media or entertainment stocks, as you would have it. Within the space, I've liked Z Entertainment after their numbers. So I think they're also sort of recovering from a low advertising kind of an year, and hopefully now things will get back on track for them. And I mean, I think each of these stocks has had some news play out for it.
In fact, post the news, there was some profit booking seen for this counter. It was going up before the news, but there has been a buying momentum which has come back into TV Today in today's session. They had sold their 3 radio stations to ENIL. That was the news which came this week. Pull up the intraday chart of Mastek Limited. I think that's touched its fresh 52-week high in today's session. It's trading around the mark of 580.81 now. So good day for Mastek as well. Sharmila, we've seen a bounce back, like a couple of these mid-cap IT companies which were, trading around their 52-week high, all-time high levels. There was some sort of long unwinding, but once again, the buying seems to be emerging at lower levels. Do you think this is the pocket which will continue to outperform for the rest of the year as well?
It's possible, because, for the last couple of years, it did nothing, because first there were concerns to do with the overall business scenario, then with Mr. Trump getting elected, the whole visa issue, etc. So I think even if you looked at the journey from January, it seems to be that mid caps are more the flavor than the large caps. So large caps have their own reasons for not really joining the rally, but I think a lot of buyers have found favor with the mid-cap IT space, and I think that could continue, because they would be sort of either product specific or geography specific, and they could actually weather this sort of rough tide a little better, providing they are in a sort of a niche environment. So that's what like market is sensing. For instance, some couple of months back, when bitcoins were the flavor, and you had Zensar saying that they're going to get into blockchain, you saw buying on that. Now that's given up. So I think market is also playing those kind of stories. So perhaps Mastek is not my favorite stock out there, but I think yes, the rally on mid-cap IT will continue.
Well, NIT Tech too, over the last 2 or 3 days, has been doing rather well in today's session to 3.5% in trade. Actually, Ruchit, do you have any thoughts here? Mid-cap IT, any stock which fits the bill for a trade?
Broadly, if we see this last couple of months, we have seen good outperformance from the sector, and even now we have, in terms of volumes, some of the stocks such as NIT Tech, Tata Elxsi, they have been witnessing good volumes when prices are going up. And whenever there are corrections, the volumes are quite less. So this is a positive sign and indication that this outperformance is likely to continue in at least in the short to medium term as well. I think these two names, NIT Technologies and Tata Elxsi, are a couple of names where if we see in terms of volumes, we believe that this outperformance would continue. NIT Tech could head higher towards 1050 kind of levels, and Tata Elxsi on the other side, it's forming a triangular pattern, but the risk reward ratio is quite favorable to create fresh longs over here, keeping a stop loss below 920 and expect target around 1050 to 1080.
Hadrien, any call on Jubilant Foodworks? That counter has too been active in the recent past, and despite of markets turning weak, this is one outperformer, so to say, of this year. Jubilant today is also trading with gains of nearly over 3%.
Yeah, surprising outperformer completely, because Jubilant Food is a high beta counter, and if we see the stock actually is always in tandem with what markets are doing, but this outperformance is completely out of the box performance from Jubilant Foodwork. In fact, it is broken out from a fresh consolidation 4-day pattern, and I think definitely this move, if you see, is backed with good volumes appreciation. I think Jubilant Food, is a good hold on to. In fact, one can also take a fresh long position on Jubilant Food and can expect a fresh 52-week high, in the near term. So yes, Jubilant Food is a good pick, in this high volatile, trade.
Okay, Sharmila, before we thank you, in a scenario like this, by the way, the markets have come off completely now. The Nifty 50 just lying absolutely flat, but not unexpected. Another big event, and that's what we talked to Jim O'Neill in just moments from now. This was anticipated. But in light of all that's happening, are you staggering your purchases? And if you're making an investment into whichever stock you will talk about right now, are you buying all of that at one go, or are you staggering it out and going very, very slow?
Absolutely staggering it and buying very slowly. And I think the last week has given me reason to think that this correction could continue beyond, March. The earlier thought was that with this LTCG sell-off, you could see things improve in April, but now I'm not so sure. I think market is going to take time to digest all this import tariffs and whatnot. So I think in the scenario, so coming to that, I was looking at NCC today. The results this last quarter were fairly good, and that way they are a fairly well diversified in the construction space. So they have something going for them in all the bits, whether it's BOT, whether it's EPC, etc. The order book has shown a very good growth in this last quarter. So I think the key thing that will make the difference to this stock going ahead is if they can actually improve execution, because execution was a tad soft in this last quarter. Last year, in fact, you could put that down to GST or whatever concerns and slow down thereof, etc. But I think if you were to see an improvement on that, and their order book certainly seems to suggest that they'll need to pick up the pace on that, then I think that this is a stock that you can buy at, this if you get it lower than 120, if you get it closer to 115, 117 levels, all the better. And you could buy it, with a first target of close to about 145, 147 sort of.
Great. Thanks so much for being with us today, Sharmila Joshi, and giving us your thoughts. Well, those are some interesting nuggets to keep an eye out for. NCC, a stock that Sharmila Joshi likes. Okay, to the big event, and bankers and investors across the globe will be awaiting the Fed Chair's Jerome Powell's commentary about the rate trajectory, maybe about what the hike and the commentary this time around could be as well. Let's get your top global voice. Jim O'Neill, visiting fellow at the Chatham House and former commercial secretary to the UK Treasury, joining us on the show. And good having you. Thank you so much for taking the time out. I think the debate would probably range from this being the first policy of Jerome Powell and how hawkish does he sound, to whether people preempt or people assume whether that the quantum of rate hikes would be 3 or 4 in nature. The Bloomberg poll, Jim O'Neill seems to suggest that it will be 3 with an indication or some hints towards a 4th one. What are you anticipating?
Well, let me first of all say thank you for having me on. Secondly, to say, obviously, I'm not as close to these things as I once was. I didn't spend the night thinking about this issue. I've got a lot of other things I'm doing, but it seems to me a quite reasonable estimate from your consensus of the poll. I would also add, I suspect the markets will be just as interested in the so-called dot plots for 2019 as well as 2018. And so not only will it be interesting as to whether the Fed shifts from 3 hikes to 4 hikes this year, but how many next year. And I suspect the markets will be very sensitive to both.
Jim, what you're suggesting is even if the guidance increases from 3 to 4 rate hikes for this year, that's already priced in by the global markets?
I think there is some. I mean, clearly it's not completely priced, but there's definitely some suspicion that, given his hearing comments recently, that could be a consequence of today. Against that, of course, the very latest news on wages was slightly better than the surprisingly and slightly worrying news we got the month before. So I think it's reasonably balanced, but I think there is some suspicion that the Fed may up it from 3 to 4. And so in terms of, sorry.
Go ahead, Jim.
I was going to say, so this time tomorrow, if he just confirms 3 hikes and there's no additional hawkishness for next year, we would probably see equity markets having a relief rally. Whereas if he does go to 4, and if he were to indicate a possible faster pace of tightening in 2019, I think we would see a sell-off, particularly because partly to do, of course, with the Facebook issue, the whole tech sector, which is quite often vulnerable to a higher profile of interest rates anyhow, would be particularly sensitive, I think.
Jim, you mentioned about the wages data. What have you made of the recent economic data that's been coming out of the US market? The payroll data has been pretty good, and even if you look at the inflation, that's been firmer. Do you think they'll be able to meet the target of 2% by next year, and US economy is showing more of tailwinds than headwinds?
So it's kind of strange. I mean, the employment data, of course, remains very strong. And the sort of consensus view, not for the first time in life, is quite optimistic about the US cycle. But I think if you look at it over the past 3 months, at the margin, the data has been slightly disappointing in the US compared to strong expectations. And I think the Atlanta Fed's latest guesstimate for Q1, for example, is below 2%. So yes, the US economy has done well and the employment indicators are very strong, but not all the indicators are as strong as one might have thought, which maybe it's something to do with the seasonals. It often seems the US starts a year off with slightly disappointing evidence compared to expectations, but the mood, obviously, particularly amongst a lot of US sell-side analysts, it seems to be very positive still.
Jim, a lot of people are making a case that while the Fed may do what it does, the real indicators and the real market movers could well be the short end of the curve, the dollar IBOR rates, and all of which are already showing signs of moving up. So the Fed is but a sideshow to the real action that the markets are anyways seeing. What happens in such a scenario? I mean, does a hawkish commentary from the Fed really rattle the markets too much, or do the markets by and large start focusing on these elements, and therefore Fed does become not the main story, but an ally story?
That's a very good question, and it's not easy to answer. It seems to me there is a bit of circularity here, but I guess at the core of trying to answer that question is that the markets basically realize the Fed is going to follow the data and try to make sure inflation doesn't pick up too much. So if the Fed reconfirms that, as I suspect they will, but if they say they are more concerned about the inflation outlook than before, then the markets will be very concerned. If, on the other hand, they take some relief from the very latest data that we discussed earlier, maybe we get a rally. But I think the underlying thing is almost whatever is said today and whatever the reaction, the markets, unless for some reason Powell gives a very, very different steer, the markets are going to remain really focused on the wage and CPI data, I think, in coming weeks and maybe months.
Jim, in light of all of this, what happens to global equities? Yes, the flows are okay. In fact, last week, we saw a bunch of flows coming out of the money markets, going into global markets, predominantly US, yes, but still going into equity markets. That said, if indeed the tone and tenor is of tightening, not just in the US, but across the world, and that certainly seems to be a consensus out there, does it mean that equity investors have to brace themselves for a rougher ride than what they were earlier anticipating?
So I certainly think almost by definition, although I quickly add, with a caveat, you know, one of the few things I've learned in 35 years is never be overly confident about anything in financial markets. But almost by definition, I think this year is going to be trickier than recent years. You know, I suspect we saw the low points in volatility back at the start of February when we had that surprising inflation data with wages. The Fed is clearly on a tightening path. It's just a matter of the degree. And in some ways, the real wild card out there, looking beyond the next few weeks, is whether at some point the ECB turns to a more hawkish stance as well. They've been, from what I can see, going out of the way to tell us that even though the European recovery is strong, they're in no mood to shift to an earlier tightening. But if the European data stayed as strong as it's been in the past 6 months, that could change too. So I think the equity markets are going to have a choppier ride. Excuse me. I wouldn't be surprised if we continue to make new highs in a number of places, but I don't think it's going to be with such low volatility as we've seen in the certainly last year and in the previous years as well.
Jim, before we let you go, it's a given at least there'll be 3 rate hikes because that's the guidance. What's the view on the emerging markets? If these rate hikes are implemented this year, 3 or 4, what sort of fund outflows do you see from emerging markets to developed markets?
You know, I've learned in the past to not get too excited about the flows. The flows tend to lag market and economic events. I don't see a lot of evidence that fund flows are leading indicators. So the flows will be a consequence of things that happen by and large. I think it's also a little bit trickier. I mean, obviously, again, historically, Fed tightening and some signs of concerns about inflation would typically suggest emerging markets won't do quite as well. That said, from a structural perspective, and obviously a very close thing to my past and my ongoing thinking about life, and I sort of have Mr. Brick stamped on my forehead. You know, I think with the relative rise of China and India, I'm not sure that just what happens with the Fed dominates so-called emerging markets anymore. Just the half an hour before I came on air, there's a lot of important policy announcements seemingly coming out of China about a new form of economic commission and all sorts of other policy developments. And if China continues to make the adjustment to a consumer-led economy that it's been making, despite some concerns about their chosen style of leadership, and if you guys in India continue the recovery you saw from Q4 with growth above 7%, I think for a lot of commodity markets and emerging markets, what happens just in the US is not as important as it was, say, 10 years ago. So you've got a number of mixed forces going on at the same time. So I think it makes for a very interesting time analytically and slightly less straightforward equity markets than we have been used to the past few years.
Okay, Jim O'Neill, many thanks for joining us today and giving us that perspective. Much appreciate your time.
Thank you for having me on.
That's Jim O'Neill with his thoughts on the Fed meet, the big event, and of course, today evening, all the data will be out on the website as well. So no matter when the release comes in, early morning tomorrow or late night today, you will have all the details on our website, www.bloombergquint.com. So do keep an eye out for that. Time now, though, for a short break here. Our technical experts stay with us, Hadrien, Mendonca, as well as Ruchit, Jain. We'll come back and continue our conversation with them. We'll also get you a clutch of editorial items, including the Fab 4 stocks of the day, tell you what dealing rooms are recommending in the session today, as well as some closing strategies, as well as Hadrien.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. जिंदगी के साथ भी, जिंदगी के बाद भी.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख.
Are
This bridge gets you in touch with interested investors, funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर list कर लूँ?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
You need a lot of patience into the next industry cycle.
Short-term pains for long-term gains.
Buying is complicated. Selling is 10 times more complicated.
If making money for investors were an art form, these folks would be maestros.
Statistically speaking, there is likely to be a big drawdown sometime in the next 6-12 months.
Is it much more difficult getting stocks right now? I think that is the basic nature of investing.
Equity reflects the future earning potential.
Circle of competence, one of the most important concepts in investing.
Biggest risk that investor takes is when he pays the highest valuation at the highest margins.
Get in on a conversation on the art of investing with India's top portfolio managers on Alpha Moguls. Thursdays only on Bloomberg Quint.
Welcome back. You're still watching Countdown with us on Bloomberg Quint, and Nifty is right now just holding with mild bit of gains, actually 28 points higher, 10,152. Let's just pull up the broader market indices. I think that's going to give a better picture as to the sell-off has been across the board or not from those higher levels. So the mid-cap index has actually also come off the day's high, only trading with gains of 0.3%. But what are the Fab 4 stocks of the day at this hour? Let's go across to Yash there to find out the same. Hi Yash, good afternoon.
Navneet. So Reliance Communication had gained as much as 15% today after the bondholders of the company at their meeting on March 20th have approved the proposal for the sale of its tower assets to Mukesh Ambani-led Reliance Jio, and also the monetization of its other real estate assets also. NGL Finechem had ICICI Direct initiating coverage on it, and the stock is up about 5%. Now, in their report, they have assigned a buy rating and have set a target price of about 465 to 505, indicating a potential upside in excess of 30% at the upper end. Also, we are looking at Ashoka Buildcon. This one had gained as much as 14% today, its highest intraday move since July 2015, after the company said that it has emerged the lowest bidder for 2 highway projects worth 450 crore rupees in Maharashtra from the Ministry of Road and Transport Department. And finally, we are also looking at TRF. This one is locked in an upper circuit of 5% after the company said that it will be selling its stake in York Transport to SF Holland for a consideration of about $40 million. Back to you.
Thanks, Yash, for bringing those Fab 4 stocks of the day. And now it's time for chart of the day. Tata Steel is the cheapest among the largest Indian steel makers if one looks at the 12 months trailing EV by EBITDA. But the consensus of analysts tracked by Bloomberg show the highest return potential from the Mumbai headquartered steel giant. Let's get you more details from Nikki Mirchandani, who joins us to explain that chart. Hi, Nikki.
Hi, Navneet. So all steel stocks have fallen by a good 5 to 17% in this last 1 month, and much of the decline is thanks to the correction that we've seen of 5-7% in the Shanghai steel prices. While the fall has been steepest in terms of 1 month range for SAIL, the valuation of Tata Steel remains the lowest or almost at par with SAIL. SAIL has corrected by a good 17% in the last 1 month, whereas Tata Steel has just witnessed a correction of nearly 8%. At a trailing 12 months EV to EBITDA of 6.47 times, the valuation compares with that of 6.2 times 12 months trailing 12 months EV to EBITDA for SAIL, which means that the valuations are pretty much at par. Besides this, the counter is currently the analyst favorite. If you look at the rating out there, while most of the analysts, nearly 25% of the 30 analysts tracking this counter, suggest a buy rating on this counter with a potential upside of nearly 39%, which indicates the highest potential upside in the whole ferrous space, or for that matter steel space. Macquarie has come up with a note this morning, and it feels that the correction in steel space has been a bit overdone, and also views Tata Steel as an opportunate risk to reward kind of factor right now in the background of robust domestic fundamentals. It also says that the risk relating to its aggressive bidding for Bhushan Twin also seems to be pretty much priced in the valuation of the company. Well, that's your chart of the day. Back to you guys.
Thanks, Nikki, for bringing all those details on Tata Steel. The stock today, however, is under a bit of pressure. Tata Steel is trading with cuts of nearly 2%. But what's doing well? Pull up the intraday chart of Radico Khaitan. That's surged. In fact, Radico Khaitan now is trading with gains of 6 to 7%, almost at day's high. And pull up United Breweries. I guess that was the one which was trading weak from the same space. United Breweries has seen cuts of almost nearly 3.5 to 4%. Ruchit, on the charts, any call on Radico or United Breweries?
See, United Breweries, we have seen that entire consolidation phase support was around 990, and today that support has been breached. And the volumes even on the sell-off in today's session is quite high comparatively on a daily basis. So I think this stock could remain under pressure and continue to outperform in near term. The only thing that needs to be watched whether this stock takes support on its 200-day moving average in maybe tomorrow to day after tomorrow, which is placed around 945. But yes, Radico Khaitan certainly looks interesting because this stock has been a relative outperformer in the liquor space since last 6 months. A high top, high bottom structure was in place, and the stock has seemed to have again resumed its broader degree uptrend. So if I have to compare all the stocks within the liquor space, then definitely there is a outperformance and the potential to continue this outperformance in near term. So one can create some long positions in Radico Khaitan at current levels, keeping a stop loss below 315 and expect target around 370 first, and if 370 is crossed, then the earlier highs of 400 could also be seen.
Okay, so according to Ruchit, one can look to buy into Radico Khaitan, which has been an outperformer, as he rightly mentioned, in the last 6 months in this space. But let's also bring in Siddharth Sedani, Vice President Equity Advisory at Anand Rathi. Hi Siddharth, good afternoon. Good to have you as usual. But any view, Siddharth? I know we've spoken about the liquor space in the past, but if one were to pick up one stock, Radico definitely has been an outperformer in the last 6 months, but United Spirits, which did cool off post its Q3 earnings, where do you think is the maximum value in this space?
Thank you for having me on the show. In the liquor space, I would say we would like to go with Radico Khaitan. We believe that the kind of premiumization this company is going into, I think there is a great scope of margin expansion going forward. Apart from that, some of the pitfalls which all the liquor companies have been getting from the states, but I think that would be very short-term driven. I think the preferences, the kind of preferences change is coming in the society across B-Town also. We believe that the entire space will be buzzing, and especially we like Radico Khaitan with it. We believe that here we have an upside of around 20% from the current price, and there is a good potential in this company going forward.
Siddharth, a couple of these FMCG stocks have been gaining traction, where yesterday we saw a surge of 5% for Marico. It's up another 2% in today's trade as well. And Emami too has seen good trading momentum in today's session. Emami has seen gains of almost 3%. And if you speak to a lot of market participants, they now find comfort in defensive sectors like FMCG. What's the top pick in this space that Anand Rathi has?
Well, top pick in FMCG space for us is Dabur India with a target of 400. Basically, we like this company on the back of their product line, Ayurved natural and herbal based, that is ANH. These products have 70% of the share in the entire product basket. We believe that Dabur looks the most exciting because as you have seen last 2 quarters, volume growth has been really buzzing. 12% volume growth last quarter it had reported. I think this momentum should continue, and we have seen the growth of Patanjali in last 3 to 4 years in this particular segment. They have really grown leaps and bounds. Dabur being a household name, a great name to hold. I think in ANJ segment, this company has a strong potential. 16% earning growth is also expected CAGR basis for next 2 years, and on top of volume growth, we believe Dabur is the biggest deliverable in the FMCG space with a 1-year horizon, target of 400.
Okay, stay on, gentlemen. So much more to talk about, but just getting a couple of editorial bits here. First, let's ask Navneet about stocks that are likely to enter the ban and come out of the F&O ban. Post that, we'll also talk about what dealing groups are recommending in the session today. But Navneet, firstly, the list.
Well, 3 stocks, Neeraj, to keep an eye on. Only one which is likely to enter into the F&O ban period for tomorrow's trade, and that's Oriental Bank of Commerce. If you look at the total open interest as a percentage of market-wide position limit as of yesterday, was about 94%. And the counter in today's session has been seeing gains of nearly 0.6%. So not major gains, but that's Oriental Bank. What may come out tomorrow could be Steel Authority and also Dewan Housing. Now, these two counters, if you look at the open interest, it was very close to coming out of the F&O ban. For a stock to come out of the F&O ban, it has to breach the 80% mark. And for Steel Authority, it was 82.4 yesterday, and Dewan Housing, it was nearly 80.4. And among all these 3 counters, I guess Dewan Housing is the one which is quite active in today's session, Neeraj, as it trades with gains of 3.5%.
Yeah, I think we were talking about this yesterday as well. So very, very interesting. DHFL features in the list today as well. Let's wait and watch what happens to that stock. Hadrien, may I ask your view on DHFL? It's been active the last few sessions.
Yeah, DHFL has been making an attempt, to stage a strong comeback, and that comeback is actually, leading to the stock once again moving above its 200-day moving average. So, for me too, it's a wait and watch, because that's a deciding factor whether we should, enter fresh longs, or we should actually use this rally that we're seeing in DHFL to actually go ahead and short the counter once it is out of the F&O, ban period. So, it's still a wait and watch for me on a DHFL at the current levels.
Ruchit, a stock that you're particularly fond of in the mid-cap IT space is Persistent Systems. Somehow, the last few days, it's come off while the others are doing reasonably okay. Does this provide, from a trading perspective, a buying opportunity into Persistent?
See, if I see the recent past, then whenever the prices have went up, the volumes on the up move are quite good. But this corrective move from high of 860 to current levels of 800, we have not seen any kind of significant or any kind of higher volumes in this. So the corrections are not supported by a good set of volumes, which indicates that the long positions which were built at lower levels are still intact. Now, if I see the support around 775, 780, there's a good support for the stock. So I am not expecting any significant correction beyond those levels. So I think if we get an opportunity around 775 to 780, that would be a good level to again enter this name.
Okay, so watch out for those levels. I'm sure when it comes in and around those levels, Ruchit will be here to give us give us that recommendation as well. Time now, though, to take a look at what dealing rooms are recommending in the session today. Darshan Mehta and Yatin Mota are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so at this point of time, some of the stocks that dealers are talking about. The first is Jubilant FoodWorks. It's up almost 4%. Some of the dealers have indicated that the trends that they are getting in because of the technical setup, the F&O setup, is extremely bullish on Jubilant FoodWorks. So this is the first stock that dealers are talking about. BEML has been doing well. It's up 5% today. Yesterday also, in the second half of trade, it did manage to spike up. There's a buzz of a potential corporate announcement, something probably to do with the divestment of the company. So BEML is something that's been actively spoken about in the dealing room. And Indiabulls Housing Finance, again, after so many days, there has been a little bit of traction that's been seen on the counter. So the promoter circle is actively accumulating the counter as per dealing rooms. But Yatin, what are you hearing?
Well, Maruti, that is one stock which is, given some a good price and volume action in trade today, and dealers, on the basis of the kind of fund flows which are there in this auto major, expect a 3 to 4% trading upside. So Maruti is one stock wherein dealers are recommending a buy. Of course, with the market, falling in the last half an hour, 45 minutes of trade, it has cooled off from the day's high, but still holding high. Apart from that, watch out for SREI Infra. That is one stock in the F&O segment wherein dealers are recommending a BT-ST kind of a strategy based on F&O trends. And in the cash market segment, we have a couple of mid-caps which are buzzing. But Wellspun Enterprises, that is one counter which is up 3% in trade, as HNIs are said to be active buyers in trade today.
Okay. We'll watch out for all of these. Yatin, many thanks for that. Wellspun Enterprises amongst companies that dealers are telling Yatin, and then of course a couple of others that Darshan spoke about. Siddharth, any thoughts on Wellspun Enterprises or companies in this line of business? Siddharth, Sedani?
Unfortunately, we don't cover any of the set of stocks in this sector.
Okay, you don't. Fair call. Looking at what's happening to telecom today, Siddharth, the Bharti Airtel is now trading at the highest point of the day, up about 5%. Arcom has some 12-13% kind of a move as well. Anything that you guys have learned?
Well, what we believe is consolidation has almost over. I think it is an ongoing process which will happen still. But overall perspective, Bharti looks the most interesting amongst the entire pack. We believe that the kind of African operations improving, they are also coming out of non-core businesses where they are not profitable. So overall perspective, Bharti looks the interesting one. But if I would like to bet for the entire lot of businesses, then I would say Reliance would be the company where I would like to bet for at least next 12 months. Because on the back of course, Jio, but along with that, the existing set of businesses has been also improving, and the kind of jump in GRM we can expect in coming 2 to 3 quarters. I think this would give a good opportunity for the investors to take on this stock for at least 12 to 18 months.
Interesting. Idea 2 is surged today. Arcom is up. Bharti Airtel is up about 5%. It's time now to get in closing strategies. Just before we do that, though, Hadrien, any telcos which form a part of a BTST?
Yeah, definitely. Idea, as you just mentioned, has actually gained some momentum in the past, 15-20 minutes. But the reason that I see here is that the weekly charts, we trace back to the lows of January 2017, and you draw a trend line. You will get a very, very beautiful rising trend line support zone from where we are seeing this pullback coming in on an Idea. So I think with a short-term perspective on an Idea, one can definitely take a bold call and initiate long positions at these levels, and one can see target of 85 to 86 levels in the coming 2 to 3 weeks. So Idea is that stock that I'm really enthused about, and one can go long at these levels.
Your closing strategy, Hadrien, or your closing strategy is something else?
Yeah, so the closing strategy would be a sell on Hero MotoCorp. The stock is actually on the verge of this symmetrical triangle breakdown that we are seeing. It is consolidating in the past 1.5 month. So I think I'd like to actually go ahead and short sell Hero MotoCorp if I see the stock falling below the 3480 mark. I'd be aggressive short on a Hero MotoCorp. So that's one stock that I'm looking out for. Second stock that I would like to chip in is an LTI, Larsen & Toubro Infotech. In fact, it is one of the stronger names that I may say from the IT mid caps. The stock has actually created a bullish engulfing pattern on the daily charts, and has found support around its moving averages. So I think LTI is one stock that I would be long on for tomorrow's trade.
Okay, so those are a couple of the trading strategies from our technical experts, but let's also get you a fundamental view going. Siddharth, any stock where you think at current levels it could be a value bet?
Yes, as a value strategy, as a value pick, we have Jamna Auto for us with a target of 95. We believe that Jamna Auto looks the most interesting in the auto ancillary pack on the back of servicing the supplies to most of the series. They have a 70% market share in the leaf springs segment, and the kind of news we are getting from the government's end in terms of scrappage policy, so and so forth. I think this would be the biggest beneficiary in terms of OEM supplies. They have a 90% supply to Ashok Leyland, 70-75% supplies to Tata Motors, Volvo for that matter. So we believe that this company has a great potential to deliver going forward. We believe around 15 to 16% revenue growth CAGR you can expect in terms of revenues, and 18% CAGR growth in terms of profits for next 2 years. In fact, in next 2 years we can expect around 200 basis point of margin expansion for the company. Stock is trading around 18-19 times FY20 earnings, and in the auto ancillary pack on the back of series, I think Jamna Auto fits the bill fundamentally with a target of 95.
Okay, that's the fundamental pick of the day on Jamna Auto with the target price of 96 as given by Siddharth. Appreciate you joining us today and taking us through your views on the markets. Ruchit, I didn't take your closing strategy. Do you have any BTST or STBT strategy?
I would recommend STBT over here. Godrej Industries is one stock which has given a breakdown from its support today. Last 1.5 months, the prices were trading sideways, and today with decent volumes, the lower end has been breached. So one can go short in Godrej Industries, keeping stop loss above 538 and expect target around 510 in tomorrow's session.
Ruchit, also Bajaj Finance among the Nifty constituents, that's been trading higher. Today is the second straight day, 3% up for that one. Any trade there on the charts?
This is more of a time correction which we have been seeing in both Bajaj Finance as well as Bajaj Finserv. We have, after a good amount of up move in 2017, last 2.5 months, probably the prices have been consolidating. So usually whenever there is a corrective move, we see two types of correction. One is price correction, and other is time correction, wherein the stock remains in a sideways in a range for a long period of time. So I think both the stocks, Bajaj Finance as well as Bajaj Finserv, have been witnessing a time correction. One should wait and watch for any kind of breakouts. As far as levels are there, 1715 is the breakout for Bajaj Finance, and for Bajaj Finserv it's around 5200. Only if prices give breakout above these resistances, then only we should assume a resumption of the broader degree uptrend.
Hadrien, has REC bounced back? We've seen the stock trading around the 52-week low, but I guess today is the second day when we're seeing some positive tick. Has it bottomed out?
Instead of REC, I am actually a little more, confident about PFC if you compare it. If you compare both the stocks, so PFC is actually approached its long-term rising trendline support zone that is close to the 84-85 levels, and if you see this month's low is also close to the 84-85 levels, and we've seen a bounce back. So I think PFC would be a better bet. If you compare it with an REC, one can place a stop loss close to 84 and see on an upside close to a target of around 95-96. That is where the 21-day moving average is being approaching. So yeah, PFC would be a better bet than REC for me.
Okay. Gentlemen, thank you so much for joining us and giving us your perspectives. Really appreciate your time, Hadrien as well as Ruchit. Thanks for being with us. Important flashes on your screen. I know market closing is about to come in, and we'll discuss this in detail with Vishwanath Buddy Johnson right now to talk about this. Lenders have rejected the bids of New Metal and ArcelorMittal for Essar Steel. Vishy, this is in line with what we were talking about in the morning, but fill us in.
Yeah, so what has happened is earlier today there was a meeting of the Committee of Creditors in Essar Steel where they were looking at the eligibility of both bidders, New Metal as well as ArcelorMittal. The resolution professional has concluded his due diligence, and what has come up is that both these bids are not eligible to be bidding for the insolvency and bankruptcy process of Essar Steel. What the lenders are saying is that these are disqualified under Section 29A of the Insolvency and Bankruptcy Code, wherein they do not allow promoters of defunct companies or stress companies to participate in the resolution process. So that is what has come up now. Essentially, New Metal has also approached the NCLT in Ahmedabad asking for some kind of leeway, saying that they be declared eligible bidders. That hearing is going to be coming up on the 4th of April, which is when we'll know what the NCLT feels in this matter. And then accordingly, the lender's decision will be, of course, dependent on what the NCLT says on the 4th of April.
Vishwanath, just stay on. We'll want to talk more about this, but it's just 2 minutes to market close, so just need to wrap the markets and then come to you in just moments from now. Let me just quickly look at the large caps, and then I'm sure Navneet will bring up the mid caps as well. But just a clutch of names that I just want to mark. Bring up the Nifty, bring up the mid cap and the small cap, and bring up the market breadth on the screens, and then you will see that we have come off quite a bit. However, off from the lows of the day as well. Similarly for the mid cap and the small cap indices, just some bit of an uptick from the lows of the day, off the highs, and not surprised here, considering the big global event, the Fed meet lined up. Don't expect that there would have been anything different out there, and the market breadth clearly indicating that the market wanted to be in a risk-off mode ahead of the event. Large caps, well, it's been Bharti, Bajaj Finance, some IT names like HCL Tech, which have bounced back in the last few minutes of trade. So those were amongst the principal gainers in the session today. Bharti and Bajaj Finance having a really good move. And amongst the losers, Tata Steel, Bosch, Adani Ports and Eicher Motors were the stocks that stood out. But Navneet, what about the broader end of the spectrum?
Well, there's a lot of stocks from the broader market which did bounce back in today's session. I want to start out with TV today. Remember, the stock had cooled off post the announcement coming in that they were selling 3 stations to ENIL. But today there was a good move seen for TV today. That counter was up nearly 13 to 14% in trade. Besides that, there were stocks like Future Market Network. This also was down in the last 2 sessions. Remember, this is the stock which has had a good last week. So today Future Market Network closed with the upper circuit of nearly 10%. Reliance Communication, the entire telecom space, was active in the last hour of trade, and Reliance Communication, it's also in the ban period for the futures and options market segment, but 10% higher for that. Balrampur Chini was the other active counter among the F&O stocks, and you had Radico Khaitan, which surged in the last hour of trade. Good going there for Radico Khaitan. That's closing with gains of nearly 7%. Ashoka Buildcon, on back of order win, and also the company declared interim dividend. That had a good day. Ashoka Buildcon, though closing off the day's high, but still with gains of nearly 6%. BEML, this one came out of the F&O ban, and there was huge amount of activity seen on the futures and options side. That counter is closing with gains of almost 4.5%. And Jubilant Foodworks, one of the outperformer of the week market, clearly up 4%. I just want to highlight few losers. HCC, PC Jewelers, both of them are in the F&O space, so they did see some bit of selling pressure, and also stocks like DB Realty and United Breweries, both of them saw sharper cuts. DB Realty was down nearly 5% and United Breweries down almost closer to 5%. But let's get some closing thoughts going from our technical experts. Hadrien, tomorrow, actually we've been having okay, I think our technical experts have already been thanked, but I guess on that note, we'll wrap it up here on this edition of Countdown. Thanks very much for watching, but don't go anywhere. Coming up next is the Mutual Fund Show.